we have passed the lowest point and that we will have learned from what we just went through. We will have learned from Korea, for instance, that really addressed the pandemic in the most efficient way based on all recorded data that we have, in that they clearly took very rigorous, effective and rapid measures, and they also tested people in a massive way. So hopefully we are taking advantage of this months of plateau and calm and decline in some areas of the world to actually build up stocks to prepare for what could be a second wave. So sharpest, deepest recession, we are probably past the lowest point. And third, we are moving towards a recovery that, I'm not going to use any of the alphabet soup letters that we hear all over, VW, U, L, Nike, logo, what have you. I think the recovery is going to be a complicated matter. And I would characterize it as sequential and as restrained. Let me explain that. It will be a sequential recovery geographically. Just as the virus has hit China first, we are seeing that the Chinese manufacturing activity is almost back to where it was. The activity is at about 90% of pre-COVID-19 time. And it was the first hit. It clearly is the first out in terms of economic recovery. It's clearly moving from east to west. And we observe exactly the same sequence that we observed with the way it hit. 3 points. One, it's characterized by uncertainty. And I'm saying that as we are trying desperately to get as much data and numbers as we can, but it's difficult in a way because the period of lockdown has also been a period when recording data, understanding the activity and the pickup was difficult. So that's number one. Number two, we have seen signs of uncertainty. If you look at the VIX, if you look at the Global Economic Uncertainty Index, and I'm not going to bore you with numbers, but they're all spiked. They've come down now a bit, but they're certainly not back where they were. Third point that really demonstrates the uncertainty is the amount of savings that we have seen. And to give you an example, in the euro area, the saving, which were partly forced, so those ones might, be released as people can go back to shops, can continue their normal consuming activity, but there was also an element of precautionary saving, and it's likely that that precautionary saving is not going to move straight into investment and consumption. But the savings were just phenomenal. They grew over that period of 2 months by 136 percentage points, to give you an idea. Second characteristic, I think, of that recovery is that it is going to be uneven. And what do I mean by that? It's going to be a continent at a time. And we are seeing clearly that, to use the Warren Buffett example of, when the tide goes away, you see those that have their swimming costumes and those that don't. Well, we're clearly seeing that the most vulnerable and the most fragile are going to be the most exposed and those probably suffering the deepest scars. It's not surprising that 70 countries have now gone to the IMF to seek support. And I'm borrowing data from my colleagues from my previous home. And of those 70, there was a large number of the 48 most fragile countries. And these countries are really going to be hit for multiple factors. Prices of commodities have gone down, export trade has declined massively, and remittances of money earned by those nationals that have gone to work outside have significantly declined. So they will be hit. Added to which, we saw a significant flow out of capitals from those countries that served very high yields. Just as at the time when we saw savings up, dash for cash, we also saw capitals flow out of those high yield countries, and that created also difficulties for those vulnerable countries. Capital flows is now coming back a bit, but it's certainly not to where it was. And that's my next point. We're not going to return to the ex ante statu quo. It is going to be different. And final point, Melinda, that recovery is going to be incomplete, and it might be transformational. And incomplete, everybody will appreciate that, because we will not travel as much, because we will operate differently. The airline industries, the hospitality industries, the entertainment industries are going to come out of that recovery process in a different shape, and some of them will probably be hurt irremediably. But it will be transformational as well, because there will be industries that will arise from those changes. My final word of caution is the following. Because we will see a revenge of proximity over mobility, because we will see a revenge of digital over physical, it is likely that trade will be significantly reduced. It is likely that as a result, productivity will be impaired unless it is pushed by other factors than trade, which did push productivity as it sustained and encouraged competitiveness. So we need to be extremely attentive to those that are most vulnerable. And by that I mean the poor in all countries, the poorest countries, youth, because they will be massively affected by the consequences of the fragmented recovery. Many of them work in hospitality business, in restaurants, on short-term contracts. Those jobs will go first. And we need to be particularly attentive to what happens to women. In times of crisis, the women are always affected more. Now, this particular crisis might be different, and that's my point of hope. It could well be that what we have gone through collectively has transformed the way in which we look at what we value, what we price, that we understand better some costs. And my real hope is that by virtue of that change of what we value, we pay more attention to women, we pay more attention to the environment, we pay more attention to those that are most likely to be more affected than others.